Hey, what's up guys? It's Ezekiel Chiu here. So let me hit you with this. How many times have you seen the stochastic scream overbought, and then you smash the sell button, right? But price just keep flying higher, right? Or it comes down and it flashes oversold, right? And then you buy because it's in the oversold zone, but the market keeps diving lower. I mean, that is not like, oh, it's bad luck, man. No, it's not. That's the market punishing surface level trading. I mean, the truth is that most traders have no idea on how to use the stochastic, right? They chase the signals without understanding what is really showing. And that's momentum, right? Until you read momentum the right way, the stochastic is going to keep lying to you, right? But once you do, it's going to flip from like a noisy indicator into a precision weapon, right? So today I'm breaking down 3 better tested stochastic strategies that I personally use to filter all the fake signals, right? To catch the real reversal, right? And to trade with momentum instead of like fighting against momentum, right? So stick with me on this one, because once you see how this works, you never look at stochastic the same way again. Alright, so first thing first, the Stochastic Oscillator is one of those tools that looks so simple, but it carries more depth than most traders they actually realize. It reads the story of the momentum in the market itself. It reacts fast enough to catch the early turns, right? So when you start combining the stochastic with this 3 powerful confirmation that I'm going to show you, it stops being just a momentum tool, right? But it becomes like a complete trading setup that is going to help you regardless of however you trade. You can add this into all systems out there, right? So are you ready? Most traders, they lose not from bad signals, from picking a fight with the trend that is still in full charge, right? So that's exactly what we are diving into. Strategy number 1, the EMA Trend Alignment. Alright, so this strategy focuses on combining the Stochastic Oscillator with the 200 EMA. So the Stochastic reads what? Momentum shift, right? But the 200 EMA confirms the overall trend direction. So when you add them together, they filter the false signals and keep the trades aligned with the market actual flow, right? So in a strong uptrend, the market can stay overbought, right, for ages, and while price keep climbing up, right? And that's where most traders get it wrong, right? They sell too early when the market goes in the overbought zone. Oh, it's time to sell. No, right? You got to realize that even when the market is going up, when the market goes to the overbought zone, right, the momentum is still in full control. So going against the trend is always going to end badly. The trend is your friend. Don't go against the trend just because the stochastic goes into an overbought zone, right? So momentum itself is not enough. We need context. So that's why we pair the stochastic with the 200 EMA, which becomes what? A trend filter, right? If the market, right, the price is above the 200 EMA and the stochastic is in the oversold zone, right? That's where we only look for what? Buy setups. All right. So now, if the market is below the 200 EMA, that's where we'll be looking to what? To sell with the stochastic being at the overbought zone. That's it. It's that simple. By doing that itself, right, it instantly removes half of the bad trades, right? So here's the process again, all right? When price is above the 200 EMA, all right, when the stochastic dips into the oversold territory, don't rush in yet. Wait for the lines to cross back inside the zone. All right, wait for lines to cross back inside the zone then that would be your green light, right? That the buyers are now stepping back into it because the market is like dipping for a pullback, right? So the same logic is the same for a sell setup, right? When the market is below the 200 EMA, wait for the stochastic to cool off at the overbought zone, right? And then when it comes down, catch the cross downwards. All right, so now once you start seeing this rhythm of how the stochastic and the 200 EMA, they kind of like move in harmony, you're going to realize that momentum and trend are simply two sides of the same story. All right, so this alone is going to stop you, like I said, from taking trades that fight the market flow. This is so important. All right, so the next time when the stochastic screams like, oh, it's now in the overbought zone, ask yourself, is the trend even done talking yet? Right, so that's why in the second strategy, mastering the art of divergence is important. Right, this is where you learn how to read the argument between price and the momentum itself. All right, cool. Now, here comes strategy number 2, divergence mastery. Hey guys, it's ZQ Chiu here. So at Asia Forex Mentor, we have spent years, right, helping traders grow, learn, succeed, and now we're giving the power back to you. So I'm introducing the Asia Forex Mentor Preferred by Traders Awards. I mean, this is where real traders like you, right, decide who truly deserve their recognition. You have seen brokers out there, right? You have traded with them, be it Forex, stocks, crypto, commodities, etc., right? So now it's your turn to decide who is best, right? So for the first time, the power is in the hands of real traders like yourself, right? There's no hype, there's no politics around. This is just like real performance that you have seen for yourself and you are about to now speak out, right? So it's time to vote for the broker that you trust the most, right? The one that has earned your confidence, your capital, I mean, your respect, right? So this isn't just about awards, right? This is about giving them the recognition. Voted by traders for traders, right? So make your voice heard, nominate your preferred broker today. So click on the link down below to cast your vote. All right, so now, in this strategy, we are pairing the stochastic oscillator with divergence patterns. The stochastic shows momentum. The divergence reveals when the momentum it disagree with the price. So this helps you to spot early reversal or trend continuation before the rest of the crowd does. So for example, when price forms a higher high, but your stochastic shows a lower high, something is off, right? This is called regular divergence. This is going to be most clearly shown at the end of an uptrend. So price keep climbing, right? And it's making higher highs. But then the stochastic, it fails to follow along. And then it starts to dip instead. So this is your clue that the market energy is running out, right? The same thing works the other way, right? In a downtrend, when the market makes lower low, right, the stochastic, instead of making lower low, it begins to rise. So this is regular divergence, right? Signaling what? A potential bullish reversal. All right, so now, here's where many traders, they mess up. They jump right in after spotting a divergence. But divergence alone is not confirmation. It's just the market hinting you, right? You still need proof. This is where something called the trend change price action would come in, right? That proof comes when price actually breaks structure, like turning support into resistance, right? Or a trend line snapping, right? So when that happens, the divergence now becomes real because it comes with added confirmation. That's where you got a valid signal to enter. It's no longer a guess anymore. Right, so now, not all divergence are created equal, right? A tight divergence has smaller swings, right, which can be harder to see, and it often forms right after sharp reversal. right? They still work, right? They still work, but only if you are careful, right? So if your chart looks too messy, what you can do, right? Quick tip, is to switch from a candlestick to a line chart, right? This is where you can see in tight scenarios like this, you can see the pattern clearly, right? So price is pushing higher high while the stochastic actually dips lower. All right, so now here, that's where we take even to a next level, right? If you really want to even increase your win rate furthermore, this is where you combine divergence with key levels, right? Support or resistance zones, right? That the market keeps reacting to it. So imagine stochastic is now showing what? Regular divergence at a resistance zones, right? So that's not just some random signal anymore, right? That is a strong reversal setup. And the reason is simple, right? Structure and momentum are now speaking actually the same language itself. Cool? So now, let's take it one step even higher, right? Even further, all right? Let's talk about hidden divergence. So, hidden divergence is not about reversal, but it's continuation. Cool? Earlier I talked about reversal trade, right? So now I'm telling you about continuation trade setup, right? So this one helps you to trade with the trend, right? Not against it. So in an uptrend, price makes what? Higher low, higher low, higher low, higher low. But your stochastic, it makes what? A lower low. All right, so this is what we call hidden bullish divergence. It signals what? That the buyers are now reloading for another push upwards. So this confirms that the hidden divergence is genuine. So when this happens, this becomes the moment for you to now prepare for a long entry that is in line with the trend itself. All right, so now the same thing goes for the downtrend, right? If price forms what? Lower highs, but the stochastic, it makes higher highs. This is a hidden bearish divergence. All right, so it means what? The sellers are preparing to continue the drop downwards. So as always, we wait for confirmation, right? After the hidden divergence appears, right? That turning point usually forms a support level. All right, so when price breaks below that level, it creates a new lower low. So this confirms that the hidden divergence is valid and the downtrend is continuing. So this is where you can prepare for your sell entry. All right, hidden divergence, it often appears when? During pullbacks. So think of it like the market taking a breath before running again, right? So when confirmed, right, by what? A break of trend line or break of structure, this is your cue to follow the main trend instead of like, oh, this is the bottom, or this is the top. So that's why the best setup are not built just on one signal. They are confirmed by adding our third strategy, the MACD confirmation. Quick pause. If you found this video helpful so far, here's something that always surprises me. 73% of you who watches this video regularly haven't subscribed yet. I mean, if you're getting value and want to support what we are doing, the best way is just to hit that subscribe button. It's free and really helps us to continue creating better content for you every single week. It truly means a whole lot to us. Okay, now let's get back to it. Right, when you combine the stochastic oscillator and the MACD, you're not guessing anymore, right? You are now verifying the trade setup itself. So each one plays a different role, right? The stochastic, it identifies what? Momentum shift. The MACD confirms the direction of that momentum. So this is the key, right? The MACD, it acts as your confirmation signal. It validates whether that stochastic move, right, is backed by real strength. So when both of these indicators, they align, this is where you can trade truly with confidence, right? So I'm going to show you how it works, right? When the stochastic, it dips into the oversold zone, right? It shows that what? The pullback is cooling off. Then what? We watch the MACD closely. When the MACD line crosses above its signal line, this is your green light, right? That crossover is your MACD confirmation, right? It proves that the momentum is now shifting into your favor. So everything now points in the same direction, momentum and confirmation. So this is your entry. All right, so now after your entry, after you place a buy order, you place your stop loss where? Just below your recent swing low, right? Just in case this is like your safety net, right? And then for your take profit, where you go, right? You aim for the next rejection level, right? So now for sell setup, it's the same. You flip the logic, right? When the stochastic, it rises into the overbought zone, right? Showing that the pullback is ending, right? The MACD now becomes your proof, right? Wait for the MACD line to cross below the signal line, and that will be your confirmation that the sellers are now taking control again. Right, so now you enter your sell position, you set your stop loss above the latest swing high, and then for your take profit, aim it at the next rejection level, or try to aim for a risk to reward ratio of at least 1:2. Alright, now I'm going to put it all together. So now that you know all the three strategies, you can either use them separately on its own. You can now stack them up all together for a super high probability trade. We first identify the trend with the 200 EMA. That is a check, right? So the stochastic matches it, right? So then the stochastic is now in line with the right direction of the trend. So check. What's even better is that in the stochastic, there is divergence there. So this proves that what? This move downwards is actually losing momentum. We add further confirmation when the MACD line crosses the signal line. Then this confirms the move altogether in it. Right, so then you can add what? You can add a trend line, you can add a structure like I told you earlier, and probably you can even add candlestick patterns as an add-on. Now, the key is this: when you have all these three in place, you are now on track to seeing a potentially strong move upwards. Good. Okay, so here's what to do next. I want to give you something that's going to change the way that you trade forever. So I've put together a free training that walks you through the exact 3-step system that I use to find high probability trades with sniper level entries, real risk control, and zero guesswork. So this is the same system that I use myself, and the same one that has helped thousands of traders go from frustration to consistent wins. And I'm giving it to you for free, right? There's no fluff, no fueler, just pure strategy. So if you ever wanted to trade with clarity and real conviction, this is the place to start. So click on the link in the description below, and I'll see you inside the training.